Hello and welcome to my December property report. Today I'm in Bangkok visiting the team at our new Thailand office, which opened earlier this year. Our team is growing our already strong client base here, and I'm delighted to have met so many clients and update them on the latest property trends. Managing Director Anita Mehra and I are also visiting Singapore and Malaysia during this trip, and we're already planning our international visits for 2024. So if you'd like to meet us and discuss your property plans, do get in touch. Well, this is my final property report of the year, and what a year it's been. Thankfully, we're ending 2023 on a more positive note than we were expecting in January. There's been lots of positivity. Firstly, inflation fell sharply to 4.6% in October, a 2-year low and the biggest single month decline in over 30 years, mainly due to lower energy costs. Prime Minister Rishi Sunak pledged to halve inflation in January, and he's achieved this. Secondly, this sharp fall in inflation reduced pressure on interest rates. The Bank of England left the base rate at 5.25% for the second month in a row. And following the inflation news, we saw several lenders, including HSBC and Halifax, drop their fixed rates. Many are now predicting rates should fall to 4% during 2024, so the data is really encouraging. In spite of the gloomy housing market predictions over the last year, there's been no crash, and the market has been steady throughout, partly due to demand from overseas buyers coupled with a shortage of properties for sale. Some sellers unable to achieve their price, choosing not to market, and yet those who price their properties accurately are selling really well. This is really why London property is such a good investment option, as even during challenging times, exit is always possible. First-time buyers continue to buy, although in far fewer numbers with no help to buy and much higher interest rates. They're often prompted by the soaring rents. While those looking to upsize are more confident now that the economy is doing well, with interest rates plateauing and the cost of living coming under control. The Chancellor's autumn statement did nothing for the property market, and my webinar with Zoopla's Director of Research, Richard Donnell, analysed the key facts, and we gave our predictions for next year. So if you weren't able to watch the webinar on the 23rd, do get in touch and we can send you a link. Here at Benham & Reeves, we've had a very busy year. We opened new branches in London, moving our Dartmouth Park office to new premises in North London, and opening at 2 new Berkeley Group regeneration developments. The first one was at Grand Union near Wembley, and the second was at the Green Quarter near Heathrow Airport, both in West London. And of course, I'm here at our new Thailand office, which also opened this year. In terms of the rental market, well, September and October were our busiest months, as usual, as large numbers of international students and professionals moved to London, but also with the addition of people who were working from home outside London, moving back into the capital and renting as they returned to their offices full time. Rental demand continues to be red hot, although it has calmed a little. As always, a lack of good rental property remains a serious challenge, and so I'm urging anyone completing soon, about to renew a tenancy, or with any friends with rental properties to get in touch and let me surprise you with how much rent we can get for you. Demand is far exceeding supply. Rightmove says they receive an average of 25 leads per London rental property, which compares to just 8 in 2019 before COVID. So this has led to a steep increase in rents. The average rent is now £2,627 per month in London. That's a whopping 12.1% increase compared to last year. We've also had so many launches globally throughout Asia, Turkey, GCC and Israel. Some of our most popular launches included White City Living, One Clapham Junction, Wembley Park, Stirling Place near Wimbledon, Clarendon and Poplar, plus Hayes Village, the Green Quarter and Royal Arsenal, which all benefit from Crossrail. But there were really many more. One of which that stood out for me, I know you all know us as London agents, but we successfully launched a Swiss ski resort called Andermatt, which was amazingly popular. And before I finish, I'm going to quickly share my predictions for 2024. Well, firstly, there'll be no recession in the UK. GDP growth is positive and will grow at a more robust rate in 2024. Inflation has peaked as energy and food price growth has subsided and will continue to fall. Interest rates have peaked as a consequence, and I'm predicting lenders will reduce fixed rates to nearer to 4%. London sales prices will grow by 3 to 4% and rents will continue to rise, but at a slightly lower rate of 6 to 8%. And finally, there's going to be an election, but hopefully with David Cameron back, we'll see so much more positivity now. So thanks for joining me from here in Bangkok, and let me remind you, if you have a property completing or about to renew, please do get in touch with us. And that just leaves me to wish you all a very happy holiday season and a happy new year. So see you all in 2024.